Show me the money. How do you keep more cash in your business? So today, I would like to talk about an interesting topic, which is to me, I hope it is to you also, and I think it's relevant to every business. I mean, we all work and we are hoping to take some money, at the end of the day home. We don't want to worry about, paying too much taxes or taxes at all, actually. So I'll teach you how to manage your cash. One little statistics, 80% of businesses that basically fail, and it's within the first 5 years of their opening, they do this. The number one reason that they failed, it's the cash. So how to ensure that you basically you have enough cash. The number one remedy for this, which is not actually hard, but it's a must-have, is discipline. So you gotta have discipline over the money that's coming in. So any money that comes in, it's not supposed to be spent. I know at the end of the day, it does get spent. There's not much left in the business or in our pocket, but you have to have the discipline in order to basically make sure that you have this resource. There's a book that came out a few years ago. It was called Profit First. I think it's a great book, and it has a lot of good tips in it that if you follow and if you implement, you're gonna have some cash left in this business, and actually it would probably encourage you to make more of it. So what he talks about, Mike, the writer, he says have 5 bank accounts, and then so when the money comes in, it basically goes, number one, it goes to your income account or sales account. But I apologize for my bad handwriting. So the money goes there. So that's basically, that's the cradle of your cash. So you send bill to people, they pay you, it goes to this account. So right from there, the first place that your money should go to, it's called profit. So what you could do as a practice, you would say, well, okay, in this business, I would like to have 5% profit. So from that income, right away, you would put 5% into that. So you receive the money from your clients, 5% goes to that, and does not mean you're going to go and spend from this account. No, that means it will stay. So from this account, from that actually income account, you create and deposit some cash into your tax account. Some of it is for the GST, for sure, because that money is not yours. You're basically an agent for CRA to collect this HST and then give it, or GST, HST, and give it back to them. So you want to put whatever HST you charged your clients, let's say it was, I guess, 13%, that 13% going to go there. Now, what we're going to add to that, we're going to add another, let's say 5%. So we're going to park it in there. So then we're going to put 18% of the money that came in from the income, we're going to put it there. So number 4, we are creating owner's compensation. So this one, in the future, it would be maybe the account that it pays you dividends from, or it's the account that you would like to have as the reward. I'm the owner, I want to get some money. So let's say we'll set that up as 3%. So whatever is left, which is number 5, it's your operating cash. So what it does, so once you basically subtract these percentages and park it in those accounts, whatever is left, you now go pay your rent, you pay your subscriptions, you pay whatever your business needs. And you would notice that you would have less money now to spend. So Mike argues that based on Parkinson law, when we have less of something, we basically take more care. One of the good example is toothpaste. Let's say when you just buy that tube, you go crazy. You just put it on your toothpaste, you use it, you may even drop some in the sink. But I don't know if you noticed that when it's at the end, basically you've used most of it, you squeeze the hell out of this toothpaste. You haven't bought, your, I guess, brand new toothpaste now. So what do? You grab it, and surprisingly enough, more paste comes out of it. So, if you had bought the new one, you probably would have chucked this one. But because you haven't bought the new toothpaste, you'll use the heck out of this old one. You squeeze it till there's nothing left in it. And then I guess you go buy it. So this gives you the discipline. This would say, okay, I only have $500, for my business. What do I do? So you will, not that you will be stingy, but now you would have priorities. If you did not do this, basically what would happen is you have whatever expenses or bill comes in, you just pay them. You don't care, it was maybe a little bit more, a little bit less, you just pay them. But if your money is limited, now you're gonna even answer them. It's like, well, do I have to pay, I don't know, $300 for this software? Do I need this? Or let's say you're paying for something, but you're not using it. Let's say you paid for a subscription for some service and you haven't used it in 4 months. So why do I, keep paying to this? I'm going to cancel that, because the more you cancel, the more you can actually bring back to the profit and the owner's compensation account. The other thing that actually Mike talks about, he says, basically go to another banking institution, open 2 accounts in there, and once in a while, maybe once a month, once every quarter, transfer the profit and the tax account into that one. Well, the tax account that basically is for you for the end of the year. And that bank account, you don't want to have your debit card, and you don't want to basically go online. So the only way that you could have access to that account is if you walk to the bank to get it. So basically, in a way, you're disciplining yourself on not freely, using it, not freely using your debit card, not freely basically taking the plastic and, tap and pay for the expenses. Once you do that, you would notice that, the cash increases in your business. And this one, this cash, this is the bloodline of your business. So once you have more discipline on this, everything is great. So then it brings you to the second part. So now that you have discipline on this, we would, I think I talked about it in my previous videos. You can go have a look. So we would go focus on 2 places. One, profit, and then the other one, cost. So we have our profit center and then our cost center. And then in this one, we try to maximize as much as we can. This one, we try to minimize as much as we can. So you want to have, or you want to find more revenue streams. You want to be more profitable. Well, you want to look at the services that you do. Is it a time to give them an increase? Are you charging correct amount for this? Are you in line with competition? Are you providing a good service for that? And then at the same time, on your cost centers, how can I reduce this expense and yet be as efficient as effective? For example, you could choose, cloud accounting, QuickBooks Online. Your cost would go down probably significantly because there's less time now involved to do your bookkeeping, because a lot of data comes in through the bank. So you can go through each item on your profit and loss statement. It's called P&L. So go look at each account and just see what's in them, what has gone to them. For example, you can look at your rent. All you want to see is, landlord, 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 landlord. And then you go to repairs. So then if there's, if you have too many repairs, you want to find out what that is, why you're paying for the repairs. Maybe you need to replace that item now. Sometimes, let's say, for example, let's say you keep paying for this repair for this item. If you buy it brand new, it'll probably be less, or you could even finance it. So, then these are the places that you're bleeding. So bleeding basically means you're losing too much cash. So you want to stop that. Once you implement this system, again, it needs a little bit of discipline, not a whole lot. Once you implement this and then follow it for maybe for 3 months, or follow it for 6 months, and you will definitely see a notice.